Something extraordinary is happening right now, even if most of the world hasn't realized it yet. The foundation of the global financial order, the US dollar, is facing its steepest decline in more than half a century. The currency that once symbolized unmatched stability is losing ground at a pace that has stunned even seasoned analysts. And while headlines focus on noisy politics and chaotic markets, a quiet storm is unfolding. China, the world's second-largest economy, has been systematically and strategically unloading massive amounts of US debt. These aren't random sell-offs. They are carefully executed moves, planned years in advance, signaling that Beijing no longer intends to underwrite America's financial dominance. On Wall Street, a phrase has started to circulate in hushed tones, a phrase unthinkable just a few years ago: sell America. The once unshakable trust in the dollar is unraveling. Nations that long treated the greenback as the cornerstone of trade are looking for alternatives. Even US investors are beginning to quietly move their wealth abroad. Confidence, the invisible glue that has held the dollar together for generations, is evaporating. And when confidence dies in global finance, collapse isn't far behind. The statistics speak volumes. In just the first 6 months of 2025, the dollar fell 10.8% against a basket of major currencies. A $1,000 portfolio at the start of the year now holds the global buying power of just $890. That missing $110 isn't simply a number on a chart. It is the reflection of a system losing its credibility. This isn't just the worst opening for the dollar in more than 50 years. It is a flashing warning light. The last time the dollar looked this vulnerable was in 1973, when America severed its link to gold and ended the Bretton Woods framework. What's happening today isn't the result of a single crisis, but of years of reckless government policies, mountains of debt, unchecked spending, and growing suspicion around the world that Washington is no longer in control of its own finances. China has seen this coming. While Washington fought noisy tariff battles and traded political blows, Beijing moved with quiet calculation. Since its peak in 2012, China has strategically reduced its holdings of US Treasury bonds from over $1.3 trillion to a new low of just $757 billion by April 2025. That's a staggering 44% reduction, or more than $600 billion in value. This isn't just a transaction. It's a statement, a sign that Beijing is stepping back from a system it no longer trusts. And this process is still accelerating. China is redirecting its wealth inward, focusing on strengthening its domestic economy and pulling away from dollar dependency. The real danger comes if other nations follow China's lead. America's financial survival depends on its ability to borrow. The US government spends far more than it collects in taxes, plugging the gap by issuing treasury bonds. These bonds pay for everything: military budgets, healthcare, pensions, infrastructure, and schools. Countries like Japan, the UK, and China have long bought these bonds, essentially keeping the American government operational. But with national debt now above $37 trillion, the strain is overwhelming. Each year, hundreds of billions are borrowed simply to cover interest payments. The entire structure depends on the assumption that the world will always line up to buy US debt. But what if that assumption fails? Yes, the dollar remains the world's dominant reserve currency. Yes, treasuries are still seen as safe. But that belief is fading. Inflation, political division, and geopolitical rivalry are pushing nations to diversify. If they begin to exit the US debt market in large numbers, Washington faces two grim choices: raise interest rates to extreme levels to lure buyers back, making debt even more expensive, or print more money, which would unleash dangerous inflation. Either outcome leads to crisis. If the Treasury market, the backbone of the American financial system, cracks, borrowing halts. Without borrowing, the government grinds to a halt. Salaries go unpaid, programs are cut, and projects collapse. And the once unthinkable becomes reality: the United States of America facing default. While the US economy struggles under the weight of tariffs and political chaos, China is preparing for a post-dollar world. As Washington debates budgets and the Federal Reserve flip-flops on interest rates, Beijing is making one of the boldest moves in modern financial history: a massive, sustained accumulation of gold. Over the past 3 years, the People's Bank of China has added more than 210 tons of gold to its reserves. But that's just the official number. Analysts and experts believe the true figure could be far higher, with hidden purchases funneled through state-controlled banks and offshore accounts away from international scrutiny. This isn't just diversification. It's a declaration of independence from a dollar-dominated system. Gold, after all, is the oldest hedge against instability. It cannot be printed, manipulated, or erased with a signature. It doesn't depend on governments, central banks, or elections. It holds value through wars, crashes, and revolutions. For China, gold is more than a financial asset. It's protection, leverage, and power. It's the anchor for a new financial order that may rise as the dollar fades. The decline of the dollar is no longer a theory. It is happening right now, reshaping the global economy. And the world that emerges from this transformation may look nothing like the one we've known for the past 70 years. The urgency behind this profound shift is clear. China has been watching with increasing concern as the United States uses the dollar as a weapon, cutting nations off from the financial system, enforcing sweeping sanctions, and manipulating trade. The realization is stark. The world's reserve currency is no longer neutral. It has turned into an instrument of control, ready to be used against anyone who dares to step away from Washington's orbit. For Beijing, the solution is obvious. Limit exposure, build independence, and lean on gold as the foundation of the future. But this movement is not China's alone. A far larger transformation is underway, global in scale, in corporate offices, on trading desks, and inside the circles of the wealthy elite. A quiet but deliberate realignment is taking shape. And tellingly, it's not just America's rivals making these moves. Even the richest Americans, billionaires, CEOs, fund managers, are shifting wealth abroad at levels unseen in decades. Programs offering alternative citizenship to Americans have seen demand surge over 1,000% since 2020. In Asia, the trend mirrors this. Family offices are steadily pulling out of U.S. markets and funneling money into Japan, China, and Europe. This isn't a flight of panic, but a calculated reallocation away from what is increasingly seen as American risk. Nearly $9 billion left U.S. equities in just 1 week. That's not simple volatility. It's a breakdown of trust. The winners are easy to spot. Japan absorbed $4.5 billion in that same week, its largest haul in over a year, while Europe gained another $3 billion. Capital is migrating toward perceived stability. This is about more than trade disputes or election cycles. Many investors now believe U.S. stocks are grossly overpriced, propped up for years by cheap money, stimulus programs, and speculation. Those days are over. Inflation may be softening, but interest rates remain high, and big institutions are unwilling to gamble on wishful thinking. They are seeking value, reliability, and discipline. Japan, once dismissed as stagnant, is now viewed as a surprising safe haven, while Europe is seen as having a steadier, more forward-looking economic direction. Over $100 billion has moved into European funds and equities in 2025 alone, triple last year's pace. At the same time, America has seen $87 billion flow out. And what is leaving isn't only money, it's conviction. For decades, the world assumed America would always bounce back, always lead, always draw investment. That assumption is breaking down. For the first time in a generation, people are openly asking whether the United States still anchors the global system. The New World Order is beginning to reward stability over dominance, long-term strategy over short-term fixes. In this climate, Europe and Japan, not the United States, are emerging as the centers of tomorrow's financial gravity. The question is no longer if investors are stepping back. They are. The real question is whether this is a temporary pause or the beginning of a permanent shift in global finance. The faith that once underpinned American supremacy is cracking. And for the first time in decades, the move toward alternatives is happening not behind closed doors, but in plain sight.